do you want to do at the top? What do you want to do at the top of the show? We gotta get into that review at some point.
Which review?
Which one?
I have a bit of selective memory as it relates to some reviews. Apparently, that was from April.
I saw it and I was like, swerve.
Did you really? You intentionally didn't bring that up back in April?
Yeah.
I gotta be
because
honest.
I didn't agree with it. But we have to be honest, and we have to address it.
So I either saw it and forgot it and got pissed off again, and I'm pretty sure that I talk to the guy on a regular basis. I know who it is.
Just slaps you.
Yeah, no, I think I know who it is.
That's hilarious.
I'm pretty sure I know who it is. And my first knee-jerk reaction was, okay, he really meant to leave a 5-star review, but he did what Saied did when he gave us a 2-star review inadvertently.
No, you don't. No, that's either 1 or 5. Because when I did it inadvertently, you just forget to. You write the review, you just forget to click the 5th star.
Your mic is facing the other way. What's going on here?
Look, it's coming at an angle.
Yeah,
you don't like that?
It's weird. It makes me
What's
feel
wrong
like
with that?
I don't know where to look. I look which side of your face.
Welcome back to the #1 financial literacy podcast in the world. This is the Higher Standard. Sitting in front of me, none other than Christopher Nahibi. In the military green. I like that. That's a good look on you. I remember when that shirt used to be tight fitted.
Yeah, it really was. I have lost a little bit of weight. I am the modern day Rock of podcasting, apparently.
Ooh, 60 pounds, bro. Why?
Does anybody really know those numbers to be true?
Yeah.
I saw a post on social media today which literally said that he went from 300 pounds down to 240 pounds. I'm like, bro, there was no world where he was 300 pounds to start with. He was 260 to start with.
Right.
Okay,
that's a lot.
Maybe.
Yeah.
And so you're saying he's 200 pounds now? I don't believe it.
I don't believe that.
So there's no world where I say he maybe lost like 40, which is still a big ass amount of weight.
Especially all muscle, right? Yeah.
And apparently I'm not your partner in crime. So sitting across from me is my partner in time, the one and only Saied Omar.
Thank you, my man. And sitting behind the desk in the production suite, the Fijian himself, my partner in crime, Rajil. What's up, my guy?
What's up, my dudes?
What's up, my dudes?
4. That's 1 less than last week.
Well, here I am wearing the Higher Standard
merch, the Anti-Guru Guru Club.
T-shirt. You also placed an order today without saying anything to any of us.
Just as like a little subtle
and
nod.
I saw the Shopify come through. Of course, he ordered the discounted stuff, so we didn't make any money off him.
Selfish, bro. Selfish.
I'm like, how did he know? Well, truth be told, Rajil, we don't make any money on any of it, to be honest.
Yeah. It's all advertisement.
Yeah, it's all advertising, which, I'm
for.
Yeah.
People need to go check it out. We got the newsletter. You spent a lot of time this past weekend preparing that newsletter to come out every time an episode drops on Tuesdays. Looks very good.
I screwed it up. So, I didn't screw it up. There were some technical challenges in the newsletter, right? So, small business owners, we got to do everything.
Well, real quick, what do people get when they sign up?
Oh, you'll get access to the merch stuff before it drops publicly. Like I don't post anything to social media first, so it gets dropped there first. Number 2, you're going to find out a little bit more of the backstory of what's going on with us at the show and how things operate. So a lot of people who were subscribed to the newsletter, they got like updates on the podcast studio build out during that time, which we didn't do on social media other than like the stories. But you'll get the latest episode, anything you may have missed, and you'll also get some social updates from us as well.
Yeah,
kind of like the behind the scenes stuff. So I'm not going to oversell it because it's still crafting it. But the whole thing was supposed to be like you generate a show, and it automatically sends out an update. If I don't go in and manually update it the night before with some specialized content, it should just ship out a newsletter every single week. But there were technical challenges. The integrations didn't work. I could use an RSS feed. If I did that, then I had to specialize code stuff. And I got to the point after like 3 different versions of this where I'm integrating with Zapier and pulling in all this like HTML coding and JSON coding. I just got to the point where I'm like, you know what? This is stupid. So I coded a template that I could use as like a repeated like aesthetic that has some things that are repeatable in it, but not all the things I wanted, which is fine. I was going to review everything anyway. But I thought it was a good look. Rajil, did you like it?
Yeah, I liked it. It was pretty cool.
Did you read it?
Yeah, and that's how I ended up buying that merchandise, those 2 T-shirts.
Oh, there you go.
Yeah.
Off that.
Oh, so fun fact, everybody who gets the newsletter gets a different version of that. So if you went to our Shopify store and you put something in your cart, that's going to show up there in your recommended like buys. If you're not, it's just going to be just 2 random products. If you've clicked on a link before, then that'll be one of your next 2 randoms when you get in. So there's a bunch of like logic built into some of that stuff.
Yeah.
And right now, the YouTube episodes are in order, but I'm going to combine it with YouTube. And then if you've looked at or watched the video, but you didn't finish watching it, that'll be one of your recommended videos. Finish watching. Kind of. So everybody's newsletter is a little bit different.
Yeah. So today's episode is going to be a deep dive into the FOMC, the data that they look at, the decisions on what they make and how they make them. And we thought that it's going to be really informative given the fact that they'll be meeting again in a couple weeks.
Yeah, this is kind of a pivotal meeting, more so than any other meeting we've talked about in the recent, probably 6 or 7 months.
Mm-hmm.
This is the meeting that we know a rate cut is coming. It's kind of a foregone conclusion. We'll get into why in a little bit from a data perspective, but this one's going to be pivotal.
Mm-hmm.
There's been a lot of political pressure, which we spent undue amounts of time talking about on the show. We've seen a lot of narrative from the FOMC. We've seen a lot of really strange behavior happening on the fringes of the FOMC. Certain members retiring before the end of their term, other members being, potentially fired under the threat of mortgage fraud, which we covered on previous shows.
Mm-hmm.
So all of this is going to coalesce into what hopefully will be the beginning of a rate cut cycle, and the data seems to suggest that it would. But there are several key prints coming out in the next week before the FOMC meeting on the 16th and 17th of September.
Right. Now, if everyone can recall, we've covered this topic a lot over the course of the last 2 years, right? We've always said that there's 3 phases when it comes to this cycle of trying to control, and stabilize prices. The Fed, they raise interest rates, right? There's a long period where they held interest rates. That's phase 2. And the third phase is when they started and they began to, there you go. Shout out.
My boy Arun. We miss you, dog.
Yeah, we do miss you, dog, even though you're not listening, dog. And then the third phase when they begin cutting. Now, we've already gone through the beginning stages of a rate cut cycle, and they were trying to find that neutral rate zone where they can maintain for a little while. But now the FOMC as a whole has started to feel a little bit of pressure and to begin cutting again.
Yeah, so there's going to be kind of 3 separate things that we're going to talk about today. Ironically, 3. Number 1, the data. We're going to talk about the non-farm payroll revisions, PPI, CPI, and what the Fed sees leading into the meeting.
Mm-hmm.
We're going to talk about the market in their current perspective. This is going to do a lot. It's going to be a lot about CME, Chicago Mercantile Exchange, FedWatch tool. It's going to be about asset pricing, the bond market, what it's already pricing in, when and why, and a little bit about the Bloomberg World Interest Rate Probability. But Wall Street, what Wall Street's really expecting here.
Mm-hmm.
And then we're going to finish with the Fed. Powell's credibility, politics, forward guidance, what really drives the decision and its aftermath is going to be very key to this meeting. I don't think there being a rate cut is a big deal here. It's going to really come down to the narrative around that. But let's get into the Chicago Mercantile Exchange.
Let's do it.
Yeah, Regil, if you want to pull this up.
My favorite FedWatch tool.
Your favorite FedWatch tool?
Yours has always historically been Bloomberg's World Interest Rate Probability.
Except there's only a little problem with that now. I don't have access to Bloomberg anymore.
This one's free 99, boys and girls.
Yeah. What Regil pulled up here is Chicago Mercantile Exchange, currently showing a 91.7% probability of a rate cut going into the meeting as of today. We're recording the show on September 2nd.
Mm-hmm.
So that's only going to get higher based on the data that we've seen so far. And when you see data this strongly favoring a rate cut of 25 basis points, and I should point out, it shows a spread of 400 to 425 at a 91.7% probability.
Mm-hmm.
There's also a spread of 425 to 450 at an 8.3% probability, basically saying that there's not going to be a rate cut.
Right, because that's where our rates are currently sitting at, and that's just saying there's an 8% chance that we are going to remain right where we're at.
Yeah, and anytime you get well over 90% like this, or frankly even over 80%, you can pretty much guarantee it's a lock. And this number will generally creep up higher as you get closer to the actual 16th and 17th meeting.
Right, and I know that we're going to go over now shortly some data points that the Fed is going to be looking at, right? But I think the key point here isn't, we referenced, I believe, on the last episode, the episode that dropped today, the commentary around in Jackson Hole, right? Mm-hmm. He wanted to make it, this is how they're controlling the narrative, right? They're telling you this is what we're focusing on. So when you get prints of CPI and PPI moving forward, right, that are suggesting that these they're not coming down to our target figures, don't be surprised when we cut rates, because if those figures stay high, they technically should not be cutting rates. But they're part of their dual mandate is, hey, we want you to know we're really looking at unemployment. And when those numbers come out, that will suggest why we're going to cut rates. And that's why the commentary in Jackson Hole is the reason why you'll see this 91.7% chance at there being a 25 basis point rate cut.
And what really bothered me about Jackson Hole, and for those of you who are what I would call FedWatch nerds, was you could see a very palpable change in narrative that was a CYA thing. They were trying to cover their ass.
Yep.
They were preparing to say, we know that some of this data likely will and is not coming out in the way that we want it to. But despite that, despite our position going into the last several months and frankly years, we're going to pivot and we're going to cut rates. They're trying not to say that it's politically motivated.
The tough part for them here too is, okay, yes, they've now reached an inflection point where the data is going in opposite directions of one another. Historically, it was like, okay, we have historically low unemployment rates, which we still do have, right? It's now creeping the other way, but we have historically low unemployment rates and high inflation. That's every reason for us to keep rates high. Yep. But now they're working in opposite directions, so you have to pick and choose. The hard part for them, the hard sell is, I mean, still an unemployment rate of 4.2, 4.3, even 4.4% is still considered historically low. Granted, it is backward-looking data, but the Fed is not known to be, playing it ahead. They should be reacting off data.
Yeah, but you know how I know this is bullshit? Okay?
Tell me.
Let's just be real practical about life.
Okay.
Right? The last 10 years, and I'm approximating some numbers, so trolls in my DMs, not today, okay? The last 10 years, we've seen price inflation increase 20% to our cost of living.
Mm-hmm.
All of us, we live a life that is 20% more expensive today than it was 10 years ago. But our salaries have not gone up by a take-home 10% number.
Mm-hmm.
So we are all feeling it in one way, shape, or form.
Yep.
Okay? So I would argue that jobs are the lower worry here. Frankly, a healthy unemployment number above 5% means there's normalized migration from job to job in the economy, right? A number of 5 or 6%, for example, historically meant that people were going from one job to another job with ease, and that a certain amount of unemployment was baked into that transitory migration. But if unemployment is super, super low, it also means that less people are leaving their jobs and they're staying in their jobs for a little bit longer. And there's obviously high demand for employees in the market that kind of dovetails into that nicely. So I would say us looking at jobs as the biggest concern here is foolish. I don't care about the revisions down. You know what I care about? Risking inflation going up higher.
Mm-hmm.
And I understand the political position the Fed is in, and I understand you have to be proactive versus reactive because you can't just change the Fed funds borrowing rate and see the economy slow down on a dime. It's going to take a slow trajectory kind of cadence to slow this thing down. You're going to think of it as a pendulum swinging. You can grab, you can hold on to it, you can pull it, but it's still going to swing opposite of you until such time as you pull it and bring it to a stop.
Mm-hmm.
So the momentum's going to carry it forward. I know all those things. I get it. But to me, we could see unemployment tick up, but we can't see we can't afford to have inflation go up.
Yeah, and that's something that we've been preaching for a long time now. Is I know what everybody would like to see is easier times again, and they think that if we were to just cut rates, okay, things can just go right back to normal. But what you're really risking, and what we haven't seen for a lot of people, they've just been living in this fantasy land for the last 15 years, right? Where if you don't fix this 3-4 year window of it all being a problem can turn into a decade-long problem.
And this is where I constantly get into, and I will admit that this is my fault. I'm the asshole, okay? I constantly get trolled by people in the real estate sphere on X that have like devout beliefs that they are right.
There was that guy recently, right, that was trolling you for demand. We haven't said this in a long time, but demand without affordability is not demand.
Yeah, I try to dumb down the ideology of it because basically and somebody else used an example of a car, basically saying the car prices were one thing. Said, demand without affordability doesn't mean that people still don't want to buy Lamborghinis. But if all cars are Lamborghinis, which all homes are expensive now,
yes,
then you're not going to be able to sell as many cars as you would be if there were more affordable options.
Right. Well, I think the definition of demand in this scenario also means that you are in the market to buy. That's the demand, not demand in the sense that I would hope to own one day. No. It's I'm in the market to buy. I have a demand to buy right now.
Well, yeah, and if you can't afford it, then you're just window shopping,
Yeah.
right? I mean, so it's a fallacy to say, and here's the problem, okay? And I'm gonna offend some people. There's a lot of really talented realtors out there. A lot of people in the real estate industry listen to this show. I respect them all, but there's also, like every industry out there, a lot of assholes. Okay, so I make the mistake of getting in an argument with somebody who acts like they know so much. I make a comment. I'm a banker. I'm a lawyer. I've done this for a long time. I kind of know these things. I understand that it comes off arrogant. It's not arrogance, okay? It's not political allegiances or any of that bullshit. You know what it is? It's just me trying to say, like, I'm steeped in this business, but I forget that everybody feels like they're steeped in this business. Everybody. Mm. So in loan officers, we talked about on the show, and mortgage real estate people generally have one real estate economics course, real estate principles, real estate economics. That's about it. They don't have like a deeper, economic spin. So what do? They listen to their favorite media outlets for their updates.
Yeah.
And unfortunately for most people,
especially for their talking points.
Yeah. Unfortunately for most people, it's not shows like this where we don't have a bias. I'm not trying to get real estate professionals to buy into my rhetoric or your rhetoric. We're not trying to placate sponsors. We're not trying to sell a product which requires you to buy into our philosophies.
Not yet.
Right? It's a free service both ways.
Right.
So I make the mistake of getting in an argument with some guy who's a full-on real estate pundit, basically saying that I don't know what I'm talking about and that I have no idea and that real estate values, aren't going to go up dramatically and this and that. And he said, so I take his image, I do a reverse Google search because of course he's got an anonymous account.
Got to, yeah.
Anonymous account. He's a former youth pastor in Illinois, right? Who's speaking very, very inappropriately to me. Leave it at that. Mm. And he's accusing me of being a liar and all these things. He started in real estate in 2018. Okay? There's nothing wrong with that. He's got a wife, 2 kids. He has a personal account that's got his name on it and this anonymous account, which he uses to troll people. At least this is what it came off as. And I got his name. I got his NMLS ID. I got his home address. If I wanted to blast somebody publicly, I could. Mm. And I'm sitting here thinking to myself, when you got your license, I had already been in real estate for 20 years. I got my real estate license in 1998. Mm. Okay? But that discounts all the other experience I have in banking and mortgage.
That's what I was going to say, right? Like, okay, you having your license for that long and helping people along the way and doing the deals that you did along the way isn't even a fraction of what you know and why you know what you know.
But here's the part that bothers me. Think about that time in business. If you got into real estate in 2018 to now, you've been the benefactor of this unprecedented artificially interest rate low economy. Mm-hmm. Anybody and everybody was making money in the game. And this is your first sense of pressure in the real estate space. Mm-hmm. So now you're taking out your frustrations, your fears, your internal monologue of fears of what the real estate economy could be if you were wrong. And you're doubling down on the fact that you know more solely because you have an anonymous Twitter account and you want to trash anybody who's spinning a narrative, which really inherently scares you, but you don't want to say that. So rather than blast anybody, I looked at his profile, looked at his information. I thought to myself, what am I doing? Why am I arguing with this person? And I always try to be collegial in the arguments. But more importantly, it stressed the fact that how much emotional sensitivity is around what's going to happen in the next 2 weeks with the FOMC. And for those people, like my brother and I had a conversation, he thought that, oh yeah, rates are going to get cut, rates are going to go down. Let's walk this through logically. If interest rates go down, and you're right, mortgage rates go down, which, by the way, last time interest rates were cut, bond market went up, mortgage rates went up.
Okay.
But let's just say you're right, real estate industry professionals who believe this. What does that do to affordability, right? If mortgages are cheaper to get and easier to get, more people are buying, there is more demand for that limited supply, which by your own admission in the space is very limited, that drives prices up further. Now, if you're a real estate professional and you have people who can buy because rates have dipped, the mortgage loan officers, the real estate professionals, the National Association of Realtors, their solution to the affordability crisis is always lower rates. It's never lower home prices. Because why would I want to earn less commission? Because I get paid on commission and it happens to be the larger loan amount or the larger home price. Mm-hmm. They'll all say, I don't care. It's not my advocacy. It's fine. But that's what your group, your lobbyist group for your trade group is arguing in Washington on your behalf.
Very convenient that it benefits you the most.
It's a very convenient narrative, which upsets him every single time. And his shut across the bow to me, this particular guy is, I'm so tired of these people saying that homes are so unaffordable. And another person came at me the other day about, institutional home buyers are changing the supply in the market. And I said, okay, I've seen the same argument from a number of people. I've never seen compelling data which suggests that institutional buyers in the market are meaningfully moving the market. And I hate to be the bearer of bad news here to most people in society. Institutional owners of real estate have always been there. They've just not been as visible to you, the consumer, who have now seen a spotlight on it because media has turned to that direction.
Right.
Why? Because lobbyist groups who have a vested interest in keeping prices the way they are pitch that like it's news to the media, and you read it thinking, oh my God, this is shocking. Big corporate America is taking advantage of us. Okay, well, that's the case always.
That's always been the case. But also, this commentary ignores the fact that we haven't said like sit on the sidelines and continue to wait. Home prices are going to come down. No, look, we've always said your home should be viewed as a utility, right? It shouldn't be viewed as an investment, even though it's the number one investment tool for the middle class. And
if you can afford a home, buy one.
Right.
But that ignores the emotions and the sensitivity of so many Americans who cannot afford to buy one.
Afford to buy one, exactly. And it should still be within your means. Remember what we say. Don't look at what the bank or the broker tells you qualify for. Make sure that you actually can afford the payment, right? Because what you qualify for is not the same thing as what you can actually afford.
That's right.
Right.
Reasonably, anyway.
Exactly.
So let's get into a little bit of the FOMC here, and let's set the tone for what's going to come next. Okay, with a 91.7% probability of a rate cut, let's just call it almost 100% at this point. That means a cut is basically priced in today. So all the mortgage rate drop that you've seen in the last couple of weeks, this is the way this plays out in real life. The bond market starts to drop, and lenders say, "How can I get ahead of this and start making mortgages today?" Because if I have to sell a mortgage on the secondary market,
right?
If I'm JP Morgan Chase, Wells, B of A, or any small community bank, and I originate a loan today at 6%, right? And I know rates are going to be at 6% in a week because rates are going to cut, then I can originate at a little bit lower price today than if I didn't know rates were going to cut. I wasn't so certain about it. So yeah, I'm making an educated guess with 90% odds. If I told you go to Vegas and bet on a blackjack table, you get 90% odds of winning, you're going to feel a lot more confident making those wagers, right? That's what the banks are doing. So mortgage rates are falling in line with the Treasuries.
Why would a bank even do that?
Because you're trying to keep origination volume going, right? Banks make money primarily on the spread, the net interest margin, the money they collect on loaning out your money, and the money they pay you on using your money and deposits, right? Your deposit rate is what they pay you. The loan is what they get paid. And the difference, the spread, is usually north of 2%, right?
Right.
And that's also the cost to operate a bank, and it's a really important thing.
And a big reason why a lot of banks got into trouble when the FOMC decided to raise rates so quickly at the cadence that they did, because it really didn't allow banks, especially regional banks, to plan accordingly to help their net interest margin.
And there is an argument to be made that these banks should have hedged the risk and had some things in place in order to hedge their bets on interest rates. But
it never happened before at the cadence that it did.
That's right. It was unprecedented.
Yeah.
So the real question for this meeting is not will they cut rates or not. It's will we see a 25 basis point rate cut or a 50 basis point rate cut? You know?
JP ain't coming out swinging like that.
I don't think so either.
He's not dropping. He's not coming out on the table and just dropping it like that. Here's 50 basis points.
Well, and also the other part of it, too, is he's going to be accused of political interference if he gets that deep early. You're only doing this because the politics behind this, JP, which is a problem for him. He does not want to cross that bridge.
No. He's so close to finishing his term. He's like, let's just.
And he doesn't want that. Yeah. And I mean, the man won't even wear a red or blue tie. You know what I mean? So
he's playing it safe.
Let's be honest about what we're dealing with here and why we're dealing with it. So, how do they cut? How do they frame the future cuts? Is it going to be one and done, or is it a cutting cycle? I think that's a very important thing. I think people, for the most part, and I say the people. I think a lot of Americans believe that, like, just like they raised rates, 1, 2, 3, 4 times every single consecutive meeting, that the rate cuts might be the same thing. Is we're going to cut every consecutive meeting till we get back down. No. Where we were at before, we are not going to again.
No. I agree. I completely agree. And look, I can already tell you what JP is going to say at the post-game press conference. He's going to leave all 3 options wide open. We're going to continue. We're making no commitments to future rate cuts. We're going to continue to be data dependent in our approach. We're going to look at unemployment. We're going to really focus on unemployment because they want to make sure they seem like they care about the labor force.
Yeah.
And if we have to stay where we are, we'll stay where we are. If we have to cut rates and the data suggests we need to, we'll cut rates. But look, I mean, if if inflation just starts to spike again, we might have to raise rates. Boom, all three options on the table.
And I feel like this is the exact same conversation that Leonardo DiCaprio has with every girl who's turning 25 in a year.
I mean, those conversations are becoming more and more limited. He's coming up there in age now.
Listen, I understand what you're saying here, but I'm going to leave my options on the table because I might do another movie there could be another Titanic out there for me. Okay?
No, there's not, though.
There are plenty of sex symbols in their 60s. Brad Pitt looks amazing.
Stud.
Okay?
Stud.
I'm just saying.
Yeah.
He's so good looking, they overlook the fact that he's a terrible dad.
Is he? Is that a thing?
That's
I don't
the
know
rumor.
that.
I don't know. I don't know.
Dang, bro.
I'm not here spreading all the TMZ gossip. Perez Hilton will tip you up, brother.
What's the rumor?
No, because the reason we got divorced is he was had like a drunken rage on a plane. And he went after Pax or something like that. And
yikes.
And Angelina Jolie like, no, you don't hurt him. I don't know how she got British all of a sudden, but you know what I mean. But apparently he stopped drinking. He went to rehab. That's how him and Dax Shepard got close. He walked into Dax Shepard's rehab. That's why he did that podcast. So I need one of you guys to become alcoholics and go to rehab so we can get good guests on the show.
Okay.
Will you pay me?
Done.
No, you want to drink. There's a difference.
Done. I'll make this happen. Say less. Yeah.
But yeah, that was actually a really good show. And he was very forthcoming, but goddamn, he's a good looking dude.
So going back to what you said, I mean, the last time we had a rate cut, the bond market responded differently. They had baked in the lower interest rates up front, and then when that cut actually did happen, rates actually went up the other way.
Yeah, and
right?
I think there's a high probability of that happening right now.
Why does that happen though? How does that even happen?
So bonds are indicative of both the short end of the curve and the long end of the curve, where you think money should go. And for a long period of time, we had an inverted yield curve, right? There was less confidence in the future of the economy and more confidence near term. I have more of a clear vision into what's going to happen. Mm-hmm. But because for a lot of American history, the future in America was always, we are the backbone of currency. Mm-hmm. We knew that to be true. So you put your money here, you were confident in leaving it here. So long-term interest rates paid more.
Right.
There was confidence in it. So you got paid more for your money over time in that bond market. Well, there's a lot of uncertainty.
There's a lot of uncertainty, right? And so when the U.S. needs money and they borrow money in the form of IOUs, aka Treasuries, right? There's three forms. There's shorter terms, there's middle terms, there's longer terms, right? You got your Treasury bills, your Treasury notes, and your Treasury bonds, okay? Mm-hmm. Now, over the course of the next 12 months, you boys did a little bit of research.
That's weird for me.
A little weird for you, right? Over the next 12 months, the U.S. has to refinance $11 trillion in debt. Or $9 trillion in debt, and they're going to have to borrow an additional $2 trillion for the overspending that we continuously do every single year. So that's $11 trillion, right? Now, here's the problem. If treasuries come down, right, but you have all the credit agencies that rating U.S.'s debt come down lower, right? What if there's an actual fear of, is this going to be the first time the U.S. really might not pay back their debts? Is that coming around the corner?
Right? I think that fear is there now.
Right?
I think that's a real fear. You've seen gold spiking recently.
So what happens?
That's very recessionary. Gold and Bitcoin going up the way that it is means that people are losing confidence in the U.S. dollar, and they're going into those assets they think will be okay no matter what happens.
No matter what happens. So what happens when treasuries come down lower?
There you go. Right? Market summary. Global futures market. Gold
futures, yeah.
Oh, gold futures.
What happens when treasuries come down, right?
That's a big number.
On
24% in the last 6 months.
On treasury notes or T-bills that are under a year, or notes that are between 2 to 10 years, or bonds for anything past that. If it's too low and they need to attract more investors, that could be individuals, that could be institutions, that could be different country governments. If they need to attract more because they need to refinance $9 trillion in debt, what do they have to do? They have to raise the rates that they're willing to pay back.
That's right.
So it doesn't matter what the FOMC might do, right? There's more at play than just the FOMC.
Well, the FOMC doesn't really have a control over the international landscape here. They're only pulling the levers domestically in the U.S. as far as currency goes. Mm-hmm. It's foolish to think that the Senate and the House and the executive branch, legislative and executive branches, can't do things that are going to change everything the FOMC has done. So you really got to think about what's coming next. Powell's conference will be, combed over for hints for months following what happens in the 17th. But is it a one and done, insurance cut like in 1995? Right, that's what happened in 1995. They cut once, and that was it.
Mhm.
There was no more fodder. There was no more communication. That was it. But it was a less communicative Fed. Or is this the start of a series of cuts like in 2001 or 2007? But 2001 and 2007 were the dot-com bubble bursting and the Great Recession. If we're not in a recessionary economy right now, I would imagine you wouldn't get a series of rate cuts. There's not a need to do so to stimulate the economy. Right. So you may just get one near term.
Mm-hmm.
The odds are obviously still kind of weird and wonky for December, but yields have already started to fall in anticipation of the cuts like we talked about, and stocks are at near highs. So if you look at the stock market as a proxy and you say, okay, well, we're at near market highs right now, right?
Mm-hmm.
Why would you need to cut more? You need to drive values up in homes, and if home prices are at their all-time high, and some people argue that relative to income adjusted for inflation, 1980s were slightly higher. Okay, fine, geniuses who have some kind of statistical analysis that's superior to everybody else. It's the second highest price in history. Does that make it better for you? Does that make it better? Do you feel better about yourself now?
But back then you didn't really have the dual income households either.
There was, well, exactly, and there's just such a wide disconnect to. It's almost like people who got into the business or got into a home before all of this are just salty as shit and saying, well, I did it, so you kids can do it too. That ignores what life is like for the next current generation, right? And it's a material disconnect in my mind that is almost selfish, if you want to call it that.
Right.
Because you have to be very, very, if you're a real estate professional and you represent a lot of people who buy homes and sell homes, maybe you are tone deaf to it. There's a lot of people who can't even walk into your office to have that conversation because they know they can't afford it.
Yeah.
So you just not talk to those people? Is that what it is?
Yeah, exactly. It's just, this isn't for you?
Yeah, I guess. The September meeting is the last one before the election cycle really heats up. There's another conversation to be had there. Cuts this close to November can be spun up as political, something that Powell hates. So I don't think you're going to see a 50 basis point rate cut just for that alone, not to mention the existential pressure he's been getting in the media. Expect extra defensive-ness in this meeting. He'll stress it's about data, not about politics, over and over and over again.
Right. I agree. And look, if 50 basis points by the end of the year is truly on the table, that's still in line with their latest summary of economic projections that they released last, where they said we could see up to 2 rate cuts by the end of the year. Right? So why would they? Why would they come out the gate and drop a 50 basis point cut when they could do 25 now and do another one in November? Right?
Especially when you don't have data all pointing the same way. Again, you have conflicting numbers from jobs and from inflation data. But let's get into that, right? So higher core inflation read unlikely to knock Fed off their course rate cut in September. This from the Yahoo Finance article. Regil, if you could be so kind. Thank you, sir. Oh, God, he's so money.
On point.
Regil,
hey, we should do a thing on the show, Regil. This is before your time. We should make him do it now. Can you read this author's last name, please?
Make him do it now.
Yeah.
Ooh.
Jennifer Schonberger.
Schonberger. Why they all? It's like they're messing with us.
For a long time, every author we saw had a penis reference name. It was all phallic.
Yeah, it was phallic, right?
There was a Dick Burger.
Was there a good burger?
There was like a Ken Dong.
Yeah.
there was so many. Like, everything.
Oh, that's right, the dog.
There was a bunch of there's a bunch of references that wasn't our fault. That we came off as perverts, but we're just reading names.
Crediting the source, bro.
Don't get mad at. I'm pretty sure those were all pseudonyms. Like everybody's writing under fake names. Yeah.
We weren't mature enough to have those conversations back then.
I'm still not mature enough. A fresh reading on the Federal Reserve's inflation gauge inched up again, but it's unlikely to knock the central bank off its course to cut rates in September. Today's inline PCE price index will keep the focus on the jobs market. For now, the odds still favor a September cut, said Ellen Zentner, chief economic strategist for Morgan Stanley's wealth management division. But the size of that opening is going to depend on whether labor market weakness continues to look like a bigger risk than rising inflation.
Best believe they're going to continue to harp on that.
They are. Personal consumption expenditures PCE index is on a core basis, which excludes volatile food and energy, like Saied and I've talked about on the show before, rose 2.9% from a year earlier, up from 2.8% in the previous month. and the highest since February. On a monthly basis, core prices increased 0.3% for the second month in a row.
So let's go back 2 years when Jerome Powell and the FOMC decided to carve a new path for themselves. The historical trend had always been, let's get inflation down to 2 to 3%.
Yep.
Right? And Jerome Powell and the FOMC decided to make it a point. We want all of you guys to realize we are aiming for 2%, not anything in between 2 to 3%, 2% only.
At the same time, they changed the unemployment healthy number to a different number.
Right. They changed that exactly from what historically had been viewed as 5%. I think it was Raphael Bostic came out and was like, since I've started my time here at the FOMC, and it's now looking like it's around 4.5%, like 4.5% to 4.7%.
Yeah.
Yeah.
So they're moving the targets to be more conservative on both ends. Had they not have moved the targets, you would have seen rate cuts already.
Yeah, exactly. So I wonder if they view that as a misstep. Like, man, why do we do this? Like, were they trying to let everybody know, no matter what we do, we're holding these rates higher for a very long time? Just say that then, right? Spin a different narrative. Why pigeonhole yourself to 2% and only 2%?
Groupthink is one of the most interesting human phenomenons. A person is intelligent in most cases, or intelligent enough, but a group of people together generally make some dumbass decisions. Right. I've seen it time and time again in business where a group of people who should be intelligent, logical, and thoughtful, pragmatic, make stupid, rash, lazy decisions because nobody wants to challenge the other people in the room for an idea.
Because they know that's not how they earned that seat at the table. They didn't earn that seat at the table by challenging. They just went along with the flow.
That's right. And people generally go along with things.
It's either that. It's one of two things, right? It's like either you know better and you didn't want to challenge, or you're faking it until you make it and you really just don't get it.
Well, and let's be clear here. Getting board seats, for example, it's not about being an outlier. How well do you get along with our people? How well do you know them? Does your resume and pedigree lend itself to us having a better image in the market? Good, great. Now come on board and don't make any static for us, okay?
Like, how many people really know these board members, right? It's the CEO that's the face normally, right?
This is why you know who Carl Icahn was?
Of course, yeah.
All right. One of the, if not the most prolific activist shareholders in American history.
Yeah, he romanticized the activist shareholder thing, right? Where, I mean, there are real dark sides to that whole realm.
Oh, yeah.
Right? And
he was not somebody who stayed away from those dark sides.
Yeah. So maybe explain to people what that means. I mean, there's that documentary. We talked about it on the show.
Yeah, Netflix. Yeah. I watched it twice, actually. I thought it was sensational because they didn't shy away from his darkness, if you will. But he grew up, I want to say New York, a traditional Jewish family, if I recall correctly. And he just was really brilliant from a young age. He was really, really, really sharp. And he was always a bit of a different kind of guy. But he called people out for shit. And there are ways that people do this that I think are terrible. And there are ways that I think people do it that are logical. And everything that he did that I've seen from an activist perspective was always under the auspices of being logical. Like he was known for going into these large companies and saying, you've got this massive middle-level management. You've got executives up top, these mid-level managers, 3 different levels of management, and the employees that report up to him. Do you need all 3? And he would go into companies and be like, what do you do? Yeah. I don't understand your title.
Yeah.
And he would restructure things. But he would go in, he would pressure the board to sell or restructure to bring value to the company and then exit. And there are very, very predatory activist investors out there. They are definitely not all good people. As a matter of fact, most of them are bad people. I don't know that Carl Icahn was a bad one. You know, I'm
sure they've all had their moments. And to some people, he's probably viewed as a bad one.
If you remember the movie Wall Street,
yeah,
the original movie with Charlie Sheen, Michael Douglas,
yeah,
Carl Icahn, what a stud. The guy is a stud. I mean, literally stud. That's him in his plumper days up top, but he got really skinny in the bottom right corner there. That's him. Yeah, that's him now. He lives in Florida now. I think he moved to Florida.
Yeah, still alive. 89.
Yeah, no, he's a stud, man. It's interesting to see his life now and how he lives in Florida versus how he was in Wall Street. Yeah, believe this. Went to Princeton, NYU Grossman School of Medicine, Far Rockaway High School.
Man, one child.
Yeah, NYU. Yeah.
Imagine stepping into that.
Yeah, but he's also you can tell he's not the kind of guy who's going to live like hyper lavishly.
No. Yeah.
You know, I mean, he's got nice things, I'm sure, but got a tremendous amount of respect for the way he did what he did. He took a very dark corporate raider type business model, and he did it in a way that I thought was ethical.
Mm.
You know, a lot of these guys are not ethical. But I was always been fascinated. If you can ever see the look up the Netflix title to Carl Icahn's.
He's just called Icahn.
Yeah, I think it is. Yeah, Icahn spelled Ichahn.
Yeah, that's his last name.
Yeah, Netflix documentary. There it is. He was a significant Netflix investor too. Wow. There you
go. maybe that's why it's so favorable.
I don't know that it was like really favorable. I mean, they talked about his dark side too.
The Restless Billionaire.
Icahn. That's it. Yeah.
Yeah.
It was on HBO. Sorry.
Even better. You know, HBO does it right.
Yeah, it was a good.
They don't really miss. Have you ever seen something on HBO that missed?
Yeah.
What?
They changed their goddamn name from HBO to Max.
I don't get that. I don't get
HBO
that
Max
either.
to back to HBO.
I don't get that either.
Just come on, HBO, get your shit together.
No, but I'm talking about their TV shows. All their shows always hit.
All of them? I don't know about all of them.
Tell me one. Honestly,
I really don't watch HBO that much anymore.
I remember back a time when if a comedian had a special released and it came out on HBO, that was the place.
But now it's Netflix.
Now it's Netflix.
And Netflix controls their data. You don't know what the streaming numbers do.
But
they tell you if it's good.
The big comedians don't care. They're like, just hand over the check.
Write me the check.
We know.
Yeah. You think I'm gonna get a call out for that
Chappelle.
one day?
Probably not, my friend.
Probably not.
Yeah.
So should we go into the meetings that coming up next?
Yeah, please.
So we got a meeting on September 5th. I'm sorry, meeting. We have data coming out on September 5th.
Mm-hmm.
Non-farm payrolls. Non-farm payrolls is the headline jobs number released monthly by the Bureau of Labor Statistics, right?
One less employee that we know of.
We know that somebody lost their job there recently. Some of the reporting was revised down.
So it's going to be interesting. This was actually going to be kind of interesting to see, okay, are the numbers changing to look more favorable towards the administration? Or
can you imagine the poor
remain
bastard
consistent?
If he gets told they have to be revised down or there's some bad numbers?
All jokes put aside, though, seriously, like this was my biggest issue. Like, obviously, we should all take issue with somebody like that being fired for just doing their job, right? But now people have to question on the data that they're presenting because they're afraid of, I might lose my job. Bro, it is what it is.
This happens to a lot of American workers every single day. Nobody wants to give bad news to the boss. Okay?
Can you recall a time when you had to give like bad news to the boss where you're like, I don't want to do this?
Oh, yeah.
Yeah?
Oh, yeah.
Give me one.
I'll give you one that's still ongoing.
What?
Yeah.
Okay.
Hey, you know that property that we financed in this location? Yeah.
Uh-huh.
We're getting sued for it.
Well,
I'm sorry, what? Yeah, we're getting
you had
sued.
to tell them.
Yeah.
Okay.
Yeah. And why? You know, I don't really know. Chris, what do you mean you don't really know?
Why are we involved? Yeah.
Why are we getting sued for it? I don't think it's a logical lawsuit. I just think we're getting sued for. Well, that's bullshit, Chris. Yeah, it is.
Yeah.
What's our deductible again? $750,000. Okay, cool. It's for $60 million.
Yeah.
So we'll probably be paying that deductible sometime soon.
Ouch.
Yeah.
No, I remember plenty of times where there have been like loans that we're doing for borrowers that have long-standing relationships, right? And they clearly have a relationship outside of just doing loans, right? They've used some of the other products at the bank, so clearly like an invested customer. And there comes a time when you're literally juggling like 7-8 loans at a time. So you're underwriting, and you're come close to like a closing date, and you're like, okay, this thing needs to get submitted and funded, and you run the cash flow, and you're like, oh man, we're in the 11th hour, and I got to cut this guy's loan.
Yeah, that's happened.
And then it's like I got to go tell the boss like, hey, I can't make this work.
Yeah.
Somebody's going to have to tell them, not me.
Which is why it's super critical to have people in the front end that know what they're doing and have the understanding from an ethical perspective to work the transactions on a preliminary screening basis in a way that meaningfully reflects what will happen in underwriting.
Because these people, like especially like at some of these like regional banks, some of these people that are borrowers for a long time and have like relationships,
you know them.
No, not only do we know them, but like they know the CEO, dude.
Yeah.
Right? And so it's like CEO has no idea what's going on with the daily operations, but then gets a call. It's like, wait, and then they got to find out who's underwriting this loan. What's the problem?
When I was underwriting deals, I would get calls like that all the time.
Yeah,
all the time.
Yeah, I was like, hey man, I'm sorry. This is what it is. I can't change it.
Keep in mind, when we started, everybody knew the CEO.
Right.
Every deal that came in was a friend of the CEO.
Yeah, right.
An
right.
An FOC.
Yeah. FOC, exactly.
And you're just like, all right, let's go.
Yeah.
And it is what it is. Let's go back to non-farm payrolls for a little bit here. Why they matter? It's going to give the FOMC and society kind of the general pulse of the economy, right? Jobs are the single most direct indicator of economic health. If companies are hiring, it suggests growth. If they're cutting, it suggests contraction. If the economy is contracting, then there's going to be a lot of hesitation as it relates to rate cuts. Mm-hmm. Inflation link, of course. A strong labor market means that higher wages, which can fuel consumer spending and inflation. Mm-hmm. So if we're hiring less people and there's not as much competition for wages, that it's not growing as much, mm-hmm. less people buying stuff, less spending, consumer spending, inflation.
Right. Well, think about it. How much of real GDP is made up of consumer spending, right? Yeah. A majority of it. And then here's the other problem here. Another great portion of GDP is government spending. Mm-hmm. So that little department that the administration tried to put together to cut government spending so we wouldn't have to borrow as much. Really what's happening is, okay, we're going to cut government spending, but that also is going to impact real GDP, which is ultimately going to trigger a recession, which is ultimately going to cause less tax revenue. I mean, it's all intertwined, baby. Yeah, it's very complex.
It's complex. And more importantly, this September 5th non-farm payroll, it's the last jobs data that comes out before the 17th meeting.
Oh, big one.
Yeah.
Oh, yeah. So they're going to rely heavily on this one.
So this is one. This is the one.
Yeah.
This is the one that's going to go, okay, are we doing this or are we not doing this? Because there's not going to be another jobs number between the 5th and the 17th.
Right.
So expect to see, if you're looking at Chicago Mercantile Exchange or World and Trade Probability, expect to see those odds increase as a result of whatever comes of those non-farm payroll responses. Mm-hmm. Then on September 9th, you've got preliminary benchmark revisions. Oh, the last time this happened, somebody lost their job. So this one's a little less sexy than non-farm payroll, but it's a sneaky important thing because it rewrites the backstory that the Fed and the markets think they're working with. So they could come in and say, okay, all the data we gave you the last couple months, we're going to revise it down a little bit. Mm-hmm. But Trump and the executive branch have surreptitiously cut this off a little bit because anybody who's thinking about revising numbers down now is going to think twice because their jobs are now in jeopardy because the head of the Bureau of Labor Statistics lost her job because of a large revision down in jobs.
Right.
So now, sneaky.
Good luck.
Sneaky. Yeah,
but you're really good. This is what you're gonna have to do. If this is the team you play for, you're gonna have to lean into this. You almost want to. I would like to see you try to fire another person for reporting the actual figures. Like that's gonna be a hard sell.
Yeah. Well.
Somebody else that steps in that is now viewed as the interim head, right? And they're gonna produce an unfavorable number for you, and you're gonna also fire them. Like, what's really going on, right? Like, come on.
Well, every year the Bureau of Labor Statistics reviews its payroll survey data from the establishment survey used for the non-farm payrolls, by the way, against a more comprehensive and reliable source, the state unemployment insurance tax records. When they compare the two of them, revisions can and do happen. The preliminary benchmark revision is the first look at how far off the monthly jobs reports have been over the past year. It's basically a fact check, if you will, on all the job growth numbers we've been obsessing about up until this point.
We had that one, I want to say a quarter or 2 quarters ago, where they ended up revising 800,000 jobs downward.
Yeah, that's a lot of jobs, dude.
Dude.
Like, that's not a little bit.
That's not a
Can you imagine a job where you're like,
imagine me being off that bad, right? Imagine me being off that bad on a loan.
That's like 30% of the jobs they've been propping up.
Yeah.
Like a lot of those jobs we were saying were out there, about 24 to 30% of them, they don't exist.
And
they're not real.
I know, and you were using that data to support your decision on not cutting rates.
My bad.
Yeah. Oops.
Yeah. So
just forget about it. Let's just keep going.
It's amazing how this happens. So why, of course, this matters. You're rewriting the job story, credibility of the Fed's playbook, market shock potential. These revisions don't always make headlines, but when they do, they're big. So, for example, when somebody loses their job over it. Mm-hmm. And signal versus noise. This one's important. I want to get into this a little bit here. Think of non-farm payroll as the monthly scorecard, okay? The benchmark revision is the league commissioner saying, okay?
That's so true.
that actually we miscounted some of those wins and losses.
Yeah.
So those teams you thought were winning their bracket, they're not winning their bracket anymore.
Yeah. Imagine Adam Silver coming out and being like, listen, guys, I know the Minnesota Timberwolves, we think that they're really good, but we gave them a couple too many wins. We're going to have to revise some of those down and prop the Lakers back up again.
We have a real tough time counting.
Oops.
And apparently we counted into twos in a couple games instead of ones.
Mm-hmm.
So those wins were 2-1 wins instead of one win, and really they only had, less.
But trust us, we figured it out now.
Yeah. So this is not trying to get them out of the playoffs. We're not doing that to get like the Lakers or somebody else in.
Yeah.
We wouldn't do that.
No. Right.
But it also helps our ratings.
Yeah, it helps the narrative that we got a good product.
That's basically what's happening here.
Yeah.
And of course, if you're going to manipulate something, right? And if you want to put on the tinfoil hat, right?
Let's do it.
And you wanted to manipulate the outcome of things, this is your last shot.
Okay. How so?
That Bureau of Labor Statistics, the boss just got kicked out.
Yeah, right.
Right?
Exactly.
It's all free game now.
But also if you're trying to like rub some elbows and be like, oh, I could be one of you guys, try to make a name for yourself.
Goes both ways.
This might be your time. Be like, hey, I'm ready. Hey, sub me in, coach. I got this. I understand the assignment. I got it.
This is where the manipulation can happen right here.
Right.
Because you can go back. Imagine this. You can go back in time and change everything.
Yeah.
Oh, you cheated on your wife? Not anymore.
Men in Black.
Yeah. That's what it is.
Yeah, exactly.
You can rewrite history now.
Right.
You can say all that stuff that we said before, and if you wanted to, you even have a fall guy. Hey, that girl you fired, the head of Bureau of Labor Statistics.
Let me tell you why she messed everything up.
I've been telling her for months.
Nah, but there have to be way too many whistleblowers. Come on, too many people.
Whistleblowers in the government, bro. Have you ever seen a whistleblower in the government really come out?
No, people are gonna have to come out and be like, listen. No, I was there for those. I was the one that submitted the report.
No, that's not the way this works. Because I can prove right now it's bullshit.
Okay.
How many people have come out as whistleblowers, protected whistleblowers in recent years and said, I saw a UFO, and society's like, no, you didn't.
No, you didn't, right? That's a lie.
That guy's cuckoo for Cocoa Puffs.
That's true.
Yeah.
That's true. A lot of people
Whistleblowers.
A lot of people there are just like, man, just keep your mouth shut. We're about to get our pension. Stop.
Yeah.
Stop talking.
I'm just saying. But you're protected whistleblowers. And I came out and said that I saw aliens, and you don't believe me.
Right.
Because I don't see an alien. That's what I'm whistleblowing on.
Yeah, right. That's exactly.
You know
I
what
saw
mean?
something that you didn't see. That's why I'm putting it out there.
You look crazy to me. What does crazy look like? You. That's what society says. Yeah. It's so messed up. So whistleblower comes out. What do they say? Yeah, you're just a political allegiant person.
Mm-hmm.
Like you're just trying to, you're kissing the ring.
Right.
Or they come out the other way. Oh, you're just like a leftist.
Mm-hmm.
You just don't like the current campaign. This is political. There's no way you can come out with a heavy revision and not be blamed for conspiracy.
It's crazy how we've gotten to a point now where people can literally have the masses not trust data.
Yeah.
Right? Like, I don't care what gets printed. You can't trust it.
Bro, the only way people are ever going to believe, and I'm going to go back to the alien reference because I just love it, that aliens exist, is it's got to be like Independence Day with these giant, like, city-sized saucers fly over everybody. People look up and they go, well, I guess that's not Russia.
Yeah, but now they've created such great AI videos that they can be like, I can't trust this.
That's Huawei.
That's AI, bro. 100%. That's the latest drone by DJI.
Yeah. There's a reason why they were banned in the U.S. side.
Do you see why?
Yeah.
Now it's coming full circle.
Yeah, they have these silent drones.
Uh-huh.
Man, they have some new drones, by the way. There are many drones that are like the size that can fit in your palm of your hand.
So sick.
That like are super fast. That like, I went down the rabbit hole after that episode that you showed me, the ones that are blowing up and they hit people.
What? Oh, yeah.
That was.
Yeah, hold on. That's out there for everybody to see. That wasn't like on the black, like the dark web, right? It's like, no. Yeah. That was like, there's a guy doing a TED talk on this.
Speaking of which, I'm gonna embarrass my wife a little bit. My wife today was like, we went to lunch with Sarah and Helen, everybody, right? And we were at lunch and we're talking, and my wife goes, "Oh, my husband's got really attractive feet." She does the whole feet thing, and that's bullshit. It's an ongoing joke. But she goes, "I'm gonna start an OnlyFans account for him. What's the app? How do I download it?" And I'm like, "Baby, it's a website."
Yeah.
She goes, "How do you know that?" And I'm like, "Damn it."
Dang, that was a setup, bro. You didn't see it?
It was a setup.
You didn't see it?
And I'm like, it's a website, honey. It's not
an
app. Yeah, it's not like social media.
They don't have an app for it though? They have to have an app for it. Rajil, on your personal device.
Yes, not on the company equipment.
On your personal, can you please verify?
Google, don't go to a website. Google, does OnlyFans have an app?
Yeah.
For the website's inquiry.
Yeah.
Or
That's
per
it.
Saeed's request, does OnlyFans have an?
Yeah.
My search history needs to show. Saeed wanted to know.
No, yeah,
if
Christopher wanted
OnlyFans-
to know about some girl named Bonnie Blue.
Who's that, Saeed?
You brought her up on the last episode, bro.
OnlyFans does not have an official mobile app available on the stores like Google Play or the App Store.
Logged into your profile. My God.
Come on, Rajil.
Well done, sir.
My wife's going to be like, why are you looking for OnlyFans apps?
Yeah.
It's recorded in the show, so there's your proof.
No,
Convenient.
baby, I was looking for Only Mans.
Only man.
Only
Right.
Mans.
Only feats.
Yeah.
Only footsies.
Yeah, I love the Gilbert Arenas podcast that I listen to from time to time. They get their segment at the end of the show where they take on emails and questions. They call it Mostly Fans.
Oh, yeah, there you go.
Yeah, I was like, oh, that's clever.
There's some haters in there. All right, so the two other reports that come out, by the way, September 10th, we have PPI. The Producer Price Index measures the average change over time and the selling point of domestic producers receiving their output. What's really interesting with this one is, unlike CPI, it captures the cost pressures early in the supply chain. So usually this moves the markets
Yeah,
a
because
little more proactively.
because they can see if this is higher, then CPI to come, PCE to come. That's going to also be higher, because if wholesalers have to incur more cost, we already know they're not going to continue to hold on to that burden. They're going to pass that on to the consumer eventually at some point in time.
So this show will come out on September 9th, right? So the day that the preliminary benchmark revisions may or may not happen,
Mm-hmm.
they're going to come out and say something. Then the day afterward, on Wednesday, the 10th, you're going to get your first look at PPI. And the bond and currency traders often react strongly to PPI because it's one of the first inflation signals each month, coming just one day before CPI, which will be the next day on the Thursday.
I don't see it. I
September
don't
11th.
see them reacting too much off this one, no matter what comes out, because the cut's happening.
Yeah.
Right. If it was uncertain, let's just say the Chicago Mercantile Exchange had it at like 50%, 60% chance of a rate cut, then maybe, right? But this cut is baked in, baby. It's happening.
Yeah, no, it's going to happen.
THS prediction, that's locked in.
Yeah, it's rare we go at 100%.
It's been a while.
Yeah, I think it's 100% accurate that we're going to get the rate cut. I think it's going to be 25 basis points. I do think that the bond market is going to rise afterward, like you saw last time. And I do think the FOMC is going to hedge their bets and be continuing to watch data. I think some of the data that they're going to get is not going to go their way. You have PPI, then you have CPI come out the next day.
Right.
I think that PPI will reflect CPI slightly rising. People are going to talk a lot about tariffs and some of the stuff that's changing or not changing.
Mm-hmm.
But I think we're in for a bit of a ride and a bit more volatility before people start to feel calm about stuff. Okay, Saeed, go ahead. Get it over with. I know what you're going to do.
We have to address this.
We do.
No, this is a teaching moment here, and one that deserves clarification.
At the end of the show when nobody listens.
Strategically done by might add, right? So we do this thing on the show where if you leave us an honest 5-star review, and clearly sometimes a 2-star review, we'll read it on the show.
Yeah.
And we'll get into it, and especially this one we'll dive into maybe a little bit deeper, right? But this from CPT Engineer.
Mhm.
Good versus evil. 2 stars. Ouch, bro, not being honest.
I still don't. I mean, when you read the review, I didn't think it was.
I mean, there's not a whole lot of hate.
No, I didn't get that vibe at all. I thought it was supposed to be a 5-star review with just some criticism, but then the last couple, like the last sentence or two about me, kind of threw me off a little bit.
Yeah, which, I mean, this was done in April, so clearly some things have happened since then. So if CPT Engineer is still listening to this, maybe this deserves a revision. Right?
Yeah, maybe.
Let's think about it. So CPT Engineer says, a show once grounded in reality. We see here a juxtaposed view on the same topic. Saeed, misspelled intentionally, I think. So shout out. Respect.
But great vocabulary, by the way.
Yeah, respect, right?
Yeah.
Representing the common man, family man, hard worker, and with morals.
Why are you laughing?
Honestly, it's hard to hate. I feel like the 2 stars we got was because of me. If they
100%. Because what he says next is pretty much like
there's some love there.
sitting across from the devil, and he does wear Prada.
There's definitely some love there. Versus Chris, the Trump apologist banker, doing what is necessary to reach the top. They bring their honest point of view to the same topic. Okay, hold on.
All right.
Honest point of view. Okay, what if it's an honest point of view, and that is a point of view? Look, sometimes we've made it very clear on the show. We try to keep it. We don't try to make it political, right? Now that doesn't go without saying that whether you like the current administration or the previous administration, there's things that you can agree with, whether you're with them or against them, right? Of all times, to say you're 100% one way or the other way, I mean, that's you're not even being honest with yourself.
Well, let me be clear. I have never openly stated my political affiliations on the show. I think people assume them because I have a tendency to give the other side of the equation. I do, in times, defend the president's position, not because I'm a loyalist to him or that I like him at all, because it's good to give the other side of the position. So much of what we see in society is extremism. You're a complete loyalist to the left, a complete loyalist to the right. I try to give the other perspective whenever I can. So, and it just so happens that we tend to be pretty level-headed and even keel. So because of that, we wind up in the middle. So I usually just take the more aggressive side, which happens to be that one.
And to be honest with you, like I feel like a majority of the people are very much moderate, right, dead center in the middle.
Yeah.
And there's one or two subjects that pushes them one way or the other, generally. But from the conversations that I've had with family and friends, and I mean, I was a political science major, and I went to law school for a year, and just having these types of conversations, you can tell now, okay, I see why you tend to go this way. It's generally over one or two topics.
Yeah, which clearly offended this person. But let me address some of that comment. Okay, if number one, I do not endorse a lot of behavior seen by the executive branch. Okay, I'll just be outright and open. But that has been independent of political party in the executive branch for decades. I didn't agree with a lot of Obama, with Clinton, with Trump, with even some of the Bush administration, right? I have my favorites for some of the things they've done along the way, but I am not a believer in political parties and voting.
Right.
I've never wanted to vote based on a political party
or this popularity contest.
I hate
this
it.
is just a popularity
and
contest.
Yeah, we've now pivoted to extremism getting votes in a sensationalized way.
Bro, people want The Rock to run for government. Like, what do we do? Like, come on, guys. Like, this is not what this is supposed to represent.
But that being said, doing whatever it takes to get ahead, I took a little bit of beef with. I'm going to be inflammatory here. I just left my fucking job, dude, because I wasn't willing to do those things because I've got morality. Talk about a guy who doesn't understand a single fucking thing about me.
Now we said like this was back in April, but back then I thought it was also very clear that you weren't going to do those things either. But now more so than ever, that has become abundantly clear.
No, I stood 110% behind the morality and ethics to leave a job with nothing else to do the right thing for me, for my family, the people around me. And I spent months lamenting that decision largely because I cared more about the employees than I did about my own personal health and well-being. And I still do, frankly. And
just based on conversations that I've had with people that are more so in, let's just say, my position, right? That, look, I have to go to work every day, and I'm going to do the best that I can at my job and continue because I feel like I need to, right? I don't have the extra income that, let's say, I haven't invested as well over the years.
That's almost everybody in society now.
But what people in my position would probably say would be like, yeah, easier to do, bro, because you make so much money on the side. Let me tell you, it's not that easy, right? You're having to up and leave everything that you've ever done, right? And you have to embark on a new journey, a path that's just unknown, right?
It's a huge gamble. I think people misunderstand a couple things too. Like the optics of being an executive at a publicly traded institution are very different, and they play to your ego a lot. Imagine being, okay, this is going to be interpersonal, but fine. Imagine being in my shoes, and I'm a notable figure on Bloomberg on the Wall Street Journal. But the day that 8K comes out and I've departed the company and that filing is made.
Yeah, but I don't think people understand what that is. But
it's a change. It's a significant change that affects the market, essentially. And I'm paraphrasing that you tell the street that this executive, a publicly named executive, is leaving. And I was one of those types of people. Overnight, my profile on Bloomberg and Wall Street Journal gets erased. It's like I was never there. Now, if I get another job at a publicly traded company in the future, which I don't have any current desire to do, then that'll show up again with my history, and I'll be out there again. but it's like you vanish overnight.
Mhm.
And your entire identity that's wrapped up in this, if it is, and mine wasn't, thankfully, can be completely challenged. You go from being this person who's getting all these emails every day, you're important, you're notable, you're all these things, to if I don't send an email, I don't hear from anybody.
Mhm.
Right? And people go, oh, well, it's easy, blah, blah, blah. Let's use the podcast studio as an example. And Rajil was here with me for a lot of this, right? And Saied, you saw it too. If you're working 16 hours a day on the weekends, you're working nights, you're spending months planning to build something like this in untraditional hours, but you also can't talk about it because people in the job will say that you're not doing a good enough job, not because you're not doing anything tangible, because you couldn't possibly be choosing to sleep less and see your family less and to do blue collar manual labor on your own to finish something.
Right.
Because why would you do that? Right?
Yeah, they can't begin to comprehend or understand because it's the path less taken. Right.
Yeah.
And it's much easier for somebody to just follow along and just go about it and just, you know what I mean?
Oh my God. Yeah.
Yeah. Like this path, I don't know. So I thought it was a little bit unfair, right?
No, look, I respect the comment.
But it's just, we respect it too. But look, it deserves some explanation. And we're very candid on the show. We've opened up a lot over the years on the show, and people deserve to understand the bigger picture on, you know, what it is that you've done and what you have given
Well, one
up.
day I will tell the story, and I have to get through some milestone markers from a litigation perspective. But one day when I tell the story, the reason why that's such a hurtful comment, and the guy who wrote it didn't know this. There's no way he could know it.
Right.
The reason why that's such a hurtful comment about the sacrifices that I chose to make and why I chose to make them.
Mm-hmm.
And I didn't do it for me. I did it for everyone else. And that story will come out at some point. And when it does, that'll come off as such a mischaracterization of who I am.
Yeah.
That it's astonishing. And what sucks is that clearly that person listens to the show. Clearly that person knows us well enough by personality.
And clearly enjoys it to some degree, right? Like,
because you're so amazing.
Yeah, because some of us got to carry the show, bro.
You know what I mean?
Some of us are carrying the show, representing. Hey, I'm the people's champ. Full circle, The Rock. You see what I did there?
I see what you did.
Okay.
All right.
Yeah. Right. So no. But anyways, we generally we've gotten plenty of disrespectful commentary over the past, and we're like, okay, we're gonna be.
I didn't think that was disrespectful, to be honest with you. I didn't think it was at all.
It wasn't too disrespectful, but it was claiming and you or marking you to be something that I don't believe is true, and I felt like you've earned the right for us to address it.
Yeah. I mean, it was a little shocking to me when I read it, but it made me go think, do I really come off that way? Like I'm willing to do anything to get ahead? If anything, like that's been my biggest downfall in my career is I've not been willing to do the dirty stuff.
No. I don't think so. I would, bro, of all people, there's one guy sitting across the table from you that would definitely let you know, like, hey, take it easy, bro. It's like, chill, relax.
Yeah.
That's not going to land very well with the listeners.
Yeah. Well, yeah. Unlike you, I've got to bleep out every once in a while.
Man, as long as we're staying in the black, right, Rajil?
You've been real quiet tonight, buddy. What's going on?
Oh no, just chilling, man.
He was having a good conversation, just chilling.
Yeah.
He was doing his job, bro. You asked him to pull stuff up. He had it up.
He did do his job. I'm not saying that he didn't, but you did promise your wife more than 6 words at a time.
You promised your wife? It's gone to this level
Yeah.
now. You're having
she listens to the show.
She does. Shout out.
And she was
Katrina,
like, look,
right?
Yeah.
Shout out Katrina.
Katrina's like, look, Rajil, I need you to say more words.
Oh, so when we eventually do the wives episode, we're gonna have 3 wives in here. That's gonna be very damaging and deadly for you because all the wives know you.
It's not good.
Yeah.
Yeah. And his wife's not afraid to, and your wife's not afraid to.
No, yeah.
I've known your wife longer than I've known you. And
That's also very true.
Yeah, it's not good. Not good for me.
It's gonna be a good one.
It's gonna be a asshole wide open episode. I'm gonna need a second colorectal surgery after that one.
Right? So this episode is gonna be episode 299.
That's right.
And then the next one's gonna be the big 300.
I gotta talk.
Non-alcoholic beer is gonna be passed around.
We haven't done an episode. If I was ever gonna drink again, that might be the scenario
Don't
I'll
get
be
me
here.
excited, bro.
Huh?
I'm gonna show up early.
Yeah.
I might be on time.
We'll just Uber here.
I might drink for episode 300.
Yeah, we should have a little bit of some people in the back
I have
hanging out.
remember those Portugal port wines?
Yes,
I've got 2 new bottles that I never opened at the house.
done. I'm already, yeah, one of them's got my name on it.
It-
The other one you can split with Fijian boy.
It's that easy to drink.
Yeah,
Yeah. What would we do there on that show? What do you want to talk about?
300.
You want to do like a look back?
Yeah, let's do a look back and talk about
How shitty our first
are we-
episodes were?
Yeah, we're gonna have to do some roasting for sure. We're gonna have to bring up Sam Zell, and that's a must.
God damn it, Sam Zell. Kermit was such a G.
Such a gangster.
Rah, rah, rah,
Yeah,
rah,
yeah, we're gonna have to bring him up. I mean, we're gonna maybe do a little dive into some of the stuff that Jerome Powell and the FOMC said, and how it relates to today, and how they maybe got it wrong, and we can still turn it
So
into a finance.
That'll
show.
be the week before. So that'll be the 9th. Yeah,
when we record, it'll be the week before, but it'll come out
the week of.
the week of.
Okay.
Mm-hmm.
Huh. Virgil, you get ready to have a drink?
Oh yeah, I'm always ready.
We should probably Uber here.
Yeah.
Dude, you know, on the streets they call him Stays Ready. That's his name. Stays Ready, bro.
Back in my day.
I've become the back in my day guy, by the way.
Oh yeah.
I'm there. I've bought in.
Yeah, between you and your boat shoes, what took you so long?
Oh, boat shoes. They're just
Yeah.
low. They're Olakais, bro. I mean, get in.
Now, but you were
Bro.
wearing boat shoes before everybody else was, like 10 years ago.
Oh, yeah, Sperry's. Yeah, see, I was, yeah, I can't even say what I was going to say because they would get us canceled. There you go.
Again.
I'm going to keep my
Can't
mouth
bleep
shut.
stuff out of the end of the
That's
show.
it. That's it. I have to have a couple episodes go clean with no bleeping before I ask you to bleep something out again.
Mm. So we're really going to do this next episode?
Look, you're stressing about it. We don't have to do this, man. Don't feel don't be peer pressured.
What if we just smoked weed the whole time?
I don't do that.
I've never actually smoked like a joint. Is that what it is? Or
I haven't done it since college. Never enjoyed it. Not
yeah, it
even
just makes you
once.
tired. At least
No,
my
that,
experience.
didn't even understand the feeling. Like, what is this?
Yeah, I'm not a big. But
Yeah,
I
well-
will drink my ass off.
I will, yeah.
All right, cocktails and dreams next episode, boys.
Bring your air mattresses.
bring your port wine to work day.
Oh, by the way, Arya is very, very much salty that Adam's been here. So I have to bring her.
Bring her.
Yeah, not the next episode, but we'll.
Yeah, probably not the right time.
Probably not the right
Yeah.
time, but yeah. She wants to come in. We'll have to let her do a little on-screen thing too, because she's like, "That's not fair. He got to do it. Why not me?"
Oh, at the end of the episode,
Yeah.
we have to record like during the day. Then
Yeah.
you can't have her here like this late at night.
True.
It's like 9
That's
o'clock.
true. Oh, yeah, and it's just no longer summer.
Yeah.
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 We'll have to do maybe on the weekend.
Okay, yeah, no problem.
Yeah, because what time is it now? It's Tuesday night and it's 9 p.m. For anybody tracking.
Well,
We
it's
can-
5 to 9, so it's almost time for free talk.
The problem is you've got 2, right?
I got two what?
Kids.
Yes.
I
got two,
otherwise-
a lot of things too.
Otherwise, we could do an opening of a show with Regil's son behind the mic and our sons on.
Oh,
on these mics.
that would be so cool. We could make that happen on a weekend. I'm down.
I know, but then what do you tell your daughter? How do you
Why?
make that right? She's already bitter about the.
She's gonna come in with the WWF belt on her shoulder, tag in, and sit in the chair. It's
All
fine.
right. It's
Yeah.
up to you, buddy.
Yeah. Look, it is what it is.
Not
Not all things can be fair. Life's not fair. Life's not fair. Okay, hold on. Adam's at the age now where he can sit in the front seat occasionally, right? Like I let him, but he technically can get away with it whenever he wants. He has the right height, right age, right weight, all that, right?
What's the height, age, and weight?
Can't remember. It's over like 70 some pounds for weight, but like he clears all the metrics, right?
Okay.
And I don't like doing it because it's still not safe. And I've heard some nurses from the emergency rooms talk about like just don't do it. It's just not a good idea. Just keep them in the back. But it makes him feel like a big boy, and all of his boys get to do it. So I'm like, if we're driving down to Target, I'm just gonna let him like, okay, we're nothing on the freeway or anything, right? Long distance. But she's asking me like, he gets to sit in the front, why not me? I'm like, bro, like he's 2 years older than you. When he decides to drive, and when he does get to drive, that doesn't mean you get to drive too. It's just part of the game.
There you go. There is no single federal age to sit in the front seat. However, safety guidelines from organizations like the National Highway Traffic Safety Administration recommend that children under the age of 13 years old should ride in the back seat because frontal airbags are designed for adults and can cause serious injury to a child.
No, but in California, I think there is like a weight limit.
If there is, I'm sure my wife can't sit in the front seat.
There you go. There you go.
Adam's 4'9" tall.
Bro, yeah.
Wow.
Right. Yeah. He's kind of big. He didn't get the genes from me. It's like got it from somebody else. Someone from my wife's side of the family. Don't do this, Chris.
Well,
I know where your mind is going. I know where your mind is going.
I
don't be disrespectful, bro.
I had no.
That's
yeah.
True story, Regil. My son was in for his one of his annual checkups, and I'm there with my wife. He's 1, I think, and I'm there with my wife and Adam, and they're doing all where they're measuring them and weighing them, and oh, he's in the 90th percentile, and I get the stuff. That stuff tapers off, and it'll eventually taper off for him too, right? But during this time, he was still in the 99th percentile for height and weight, right? And I'm in the room with my wife, right? I haven't introduced myself yet to the doctor, really, and he goes, "Wow, Daddy must be tall." I can't be the daddy. It's that obvious that I can't be the daddy. What's going on here? That's wild, bro. What you don't have enough decency to look over and be like, "Hey, bro, are you the dad?"
Did you leave a 1-star review?
Honestly, I should have.
Kind of Yelp.
Yeah, something. You don't pay for my copay with that comment.
This motherfucker right here is heightest.
Right, he is a heightest. I should have started something.
I have. I'm not gonna take the bait, by the way. Just I'm a bigger person than you, literally. But I am going to give you a similar story, where I walk into a doctor's office with my dad, who's 5'5", tells everybody he's 5'8". My mom's 6'4".
He tells everybody he's 5'8". I love that.
He does. Yeah, that's why he wears heels all the times. Why he puffs up his chest when you walk in the room.
Yeah, Adam. I told Adam I'm 5'8", and he literally goes, "Dad, you're
Yeah.
5'7". I'm like, Adam, relax. I'm 5'8". Truly, I am. Why are you doing this to me? Why you got to take it away?
So my dad, same thing, but a couple inches shorter.
Yeah.
And they always look at me and go, I don't understand. And then my mom walks in, and they go, wait a minute,
How did he make that?
Yeah, and then
that's game.
Yeah, it's
Dad's got game.
It's got a lot of. I'm grateful for that part of the DNA. Let me tell you.
Yes.
Because I could not imagine life differently than I've lived it. But I definitely got my mom's height.
It sucks for both of us though. Both of us can't buy off the rack.
Yeah, I can't buy pants.
I can't buy pants either. I got to get everything hemmed.
Everything's got to be hemmed, and then big boy problems. Shoulders too wide.
Nothing fits right.
Butt too big. Nothing fits right. At some point, you realize growing up that clothing wasn't really designed for somebody your size. I actually listened to, remember Chris No from The Leverage? He was on the show way back in the day.
He just did a pod recently where he let out some secrets.
And on that podcast, he was talking about how he made, his company made $20 million from biker denim.
That's right. That's right. He was the first big one in that, right?
He was the first one to make it in plus size, bigger sizes, because when it came out, it was all designer. And then he came out and started making it for the athletes and everybody who were a little bit bigger and thicker and the legs and length.
He knows a lot of NBA guys too.
Yeah. So that's how that spread like wildfires. People were like, I like that design, but it's skinny fit for those people only. So they took a skinny fit design and made it for bigger people.
I remember when that came out, I was like, this is hard. I liked it too. I never could own a pair because you boys got the teardrop thighs.
Fun fact, I actually intentionally lost weight to buy 2 pairs of skinny bikers in them back on the day.
Because they were so cool.
Yeah. And it lasted for a solid 6 months. And then I tore the asshole.
Yeah, of course you did.
The ass tore open.
Of course you did.
Yeah.
All right. You got anything else for Jill?
I do have a friend who.
Oh yeah, that's right. There's a question.
Yeah, so I have a friend.
Yeah, he has a friend. We didn't know.
Yes.
Yeah.
So I got a message, guys, and
from your imaginary friend.
Yeah. So my imaginary friend messaged me.
Oh yeah.
Asking if we can give a brief description of what an RMD is.
So he's like, say what again?
Say it again. Say it with your chest.
So
can we give a brief description on what
a required minimum distribution?
Yeah.
Mm-hmm.
Yeah.
Is this for the 401k, right?
Yeah.
Right. So,
it's still currently 73, but I think in 2033 it's going to go up to 75, I believe, the age. But basically, when you hit a certain age, the IRS, the federal government, requires you to take mandatory minimum distributions from your retirement, which for a lot of the working population can become a very stressful thing. And the reason why this becomes stressful is more and more adults are staying in the workforce, and they want to continue to work and contribute to their 401k and see it grow. And if you happen to be, let's say, in your 70s, where this is a requirement for you, let's say 73, and you've got the benefit of having done this for 20, 30, 40 years, if not longer, you probably have a couple $1 million. Well, the minimum distribution, as I want to say, it's a pretty heavy number percentage-wise. So I think on for every $1 million, it's like $25,000 in minimum distributions.
And if you have a traditional IRA, you're paying taxes on the distribution, right? Because you didn't pay taxes on the money going in, so you're paying it on the way out. Versus the opposite, when you have a Roth.
Yeah,
right?
You're getting it tax exempt still on some level, but so effectively it requires you to start taking money from your 401k.
And I think that's where people have the hesitation, what makes them nervous, right?
Yeah, well, again, you're taught your entire life to save, and now you're being forced to use it. I think the biggest misconception people have is, here you go, withdrawal factor, 26.5. So for every required minimum distribution, so dividing your account value by this factor determines your annual distribution. So you divide by 26.5 to account for the expectancy. The IRS Public 590 Table 3 Uniform Lifetime requires a minimum distribution of $56,603.77 for $1.5 million.
If you had, a previous year balance, yep.
So see what it's at $1 million? Should be about should be 26. Yeah, 37,735 for So. You got about $2 million, $50,000 minimum distribution. So
right,
that's a pretty hefty amount, and people are really weirded out by it. Change for a lot of people is scary, right? And you go from this period of save to now I can spend. Now I'm required to spend.
Right.
People are still trying to find structured tax advantages. You know what I would tell somebody in their 70s like this, that's dealing with this first time if you're in the workforce?
Yeah.
Fucking enjoy it, man.
Yeah. Congrats.
You've worked for it.
Congrats.
You've earned it. Spend that money on stuff that's going to enrich your life. Yes, you can live to be 93. Yes, you might need 20 years more money. Then go take half that money, buy something nice for yourself, take the other half of it, invest it in something.
Dude, I have two different kids at home. I have a kid that loves nothing more than to save, and I have a kid that loves spending every last dollar and some. And I'm like, oh my God, how is it?
So Ari is a saver.
No, Adam.
Really?
Bro, Adam does not want to spend $1 of his money on anything. Nothing, right? The only thing that he'll spend his money on, if he gets a couple extra bucks, will be let's go to Yogurtland. He'll spend it on things like that.
I've been to Yogurtland in a minute.
Right? He likes that. He's got a crazy sweet tooth. I'm like, God. But Arya will spend, she wants, there's these new toys going around that all these kids like, and not just kids, I think adults too. They're called Labubu or something.
Labubus?
Bro, stop.
You know this?
Yeah.
Come on, man.
No, I'm just getting hip to this. Bro, it's $60 for what, a keychain? What are we doing?
For a keychain that people wear.
And I was like, Arya, you're going. Hold on, Arya, you are.
These are all over social media for the last 6 months. Where you been?
My social media is comedy and basketball drills. That's all it is, and finance stuff.
I guarantee you, some of those basketball players walking into the NBA franchise had Labubus on their waist.
Maybe I wasn't paying attention. Right.
Their wives all have them on their purses.
For sure.
Yeah.
But
there's Lafufus everywhere.
I'm literally telling her, hey, last week when you bought this thing and you stopped caring about it, it's going to be the same thing. Why? And
that's not how it works for girls and trends.
Yeah. Doesn't work.
She wants to be hip and cool, man.
She wants to be. And I'm literally having this conversation with her in bed last night. I'm like, explain to me. Just explain it to me.
You're not going to explain it.
No, I'm saying explain to me why it's cool. What makes it cool?
It's like saying, why are Backstreet Boys cool back in the day? Your generation.
Why? They're in unison. They're a team. They're a team.
Tell me why.
You were a Backstreet Boy, huh? No. It was NSYNC all the way, bro. JT.
I wasn't the one.
Come on, stop. That's
NWA,
not true.
Bro. What does that stand for again?
Good night, everybody. Bye. I'll do both of them. It's broke.